want to waste people's time. Thank you so much. All right, everyone. I wanted to say welcome and thank you to our first planned giving seminar. And we are really delighted that our Planned Giving Society is named after two of our very special supporters, Jim and Sandy Jones. And to start us off today, I'm going to introduce two people who are going to present a wonderful seminar to us today on planned giving. And Sherry Leo, who is the Senior Vice President and Manager of Nonprofit Services at Fulton Bank, along with Peter Reitmeyer, Chartered Advisory Professional, also Vice President, Relationship Manager of the Nonprofit Services at Fulton, will be presenting. Now there will be a good time for question and answers. So Sherry and Peter, over to you for the moment.
Okay, thank you, Suzanne. I'll kick us off here and get us started. So thank you all for being here. And as Suzanne said, it's the first one that they're hosting. So Peter and I are very happy to be able to be a part of it. What we really hope today by the title, Demystifying Planned Giving, is that we kind of put planned giving into some simple explanations and simplify it a little bit. Maybe educate folks on some things that maybe they didn't know fall under planned giving or how it works, and maybe just spark some ideas. Maybe just bring up some things that you didn't know about and spark some ideas on ways to give to PennFuture or really any nonprofit organization. So before I start, I am Sherry Leo. Suzanne mentioned that, and I've joined Fulton in 2015, so I've been there about 7 years right now, and I manage a department within Fulton Financial Advisors that only works with nonprofit organizations. So we happen to manage the endowment for PennFuture and a bunch of other nonprofit organizations, or we have charitable accounts such as foundations. So everything we do really has a charitable purpose, which is exciting for both Peter and I. It's hard to believe that I've almost been doing this for 30 years, was an investment officer at one point, but then worked at Lafayette College for 3 years as an advancement or a planned giving officer, and then was lucky enough to, move to Fulton and use both of those skills to become manager of a group that really invests money for nonprofit organizations, and kind of use both sides of my experience. And then I also, do some of what all of you do, is serve on boards, get involved. I'm on the ARC of Lehigh and Northampton Counties board of directors. I've served on the Planned Giving Committee for Northampton Community College here in the Lehigh Valley. I'm on the President's Advisory Council for DeSales University, and I also have serving on the Endowment Committee for the United Way here in the Lehigh Valley. So that's a little bit about me, so you know who's talking to you today and what our backgrounds are. Peter joined Fulton Financial Advisors in 2021, and as Suzanne says, he is a chartered advisor in philanthropy, so definitely has a background to be talking about these things. He has actually, though, more than 25 years of experience in investing and kind of working and consulting with nonprofit fundraising and organizations. He came to us most recently from the American College of Financial Services, where he was an AVP in advancement, which again kind of goes very well with the planned giving side of things. And then he has actually done some volunteer and leadership roles with the Planned Giving Council of Greater Philadelphia, the Association of Fundraising Professionals, both the Philadelphia chapter and the Berks County chapter, and then he is on the Chester County Estate Planning Council. So that's a little bit about us, so that you kind of know who's presenting and giving some information today. So if we can go to this next page of the slides, which is page 2, we're just going to do a really brief background for those of you that may not know Fulton or Fulton Financial Advisors. You can see there our history. One of the things we're very proud of is we go back to 1882 when we were founded, and we've remained independent all this time. So anybody that's followed banks or have done some, has been a customer of a bank that's been taken over, we've been able to maintain our independence and continue to grow. In fact, we just announced a bank that we're buying in the Philadelphia area that we're in the process of doing. So we continue to look for banks that fit our footprint. But we're in 5 states now. So we're headquartered in Lancaster, but you can see that we're in 5 different states, different parts of the states. And then, we have the bank itself, but then we, Fulton Financial Advisors, if you look at the next slide, we are part of, or a division of, Fulton Bank and part of the holding company. And we really just invest money for folks. We're about $13 billion. And I think the important distinction is we are overseen by the OCC, a federal banking regulator. So everything we do is looked at as if we were trustee or fiduciary of the money. So we may not have to have that role, but that's really how we manage money for folks, including PennFuture. So they really get that fiduciary background. And then the last slide of just kind of about Fulton, just to give you an idea who we serve in Fulton Financial Advisors, the investment division. The Fulton Private Bank really deals with individuals' monies or for-profit business money. We have a few for-profits we manage money for that it's their own monies. And then Peter and I are part of that nonprofit services group. So again, all of our clients are 501c3s or some sort of charitable foundation, some sort of charitable identification by the IRS. And then we have a retirement services group that does both defined benefit and defined contribution management for businesses, both for-profit and nonprofit businesses. So with that, I will maybe let Peter introduce our next part of the presentation.
Well, good morning, everyone, and thank you so much, Sherry, for the introduction and background on Fulton Financial Corporation, the bank, and Fulton Financial Advisors. It's great to spend some time with everyone. We really appreciate the interest level in plan giving. Today, we're going to be talking about demystifying plan giving. We're going to try to break it down to some simplistic terms and some things you can walk away with, some potential action items. But before we do so, I'm going to turn it over to Jackie Bonamo, who you know as PennFuture CEO, and she is going to introduce us to the Jim and Sandy Jones Legacy Giving Society. So Jackie, if you want to give the introduction, we'd really appreciate it.
Yeah, sure. Thank you. And before I do, I wanted to say thanks to Suzanne and Travis for pulling this together. I want to welcome Scott Tobe, our board chair, who's with us. We've got a member of our leadership council, Gail Neustadt, a past board member, Jack Deadweiler, and of course, Dr. Jim and Sandy Jones. So my job is really to thank Dr. Jim and Sandy Jones for their leadership and support and encouragement in establishing the Dr. Jim and Sandy Jones Legacy Giving Society at PennFuture, which they did in 2018. And Jim and Sandy have had a longstanding relationship with PennFuture. Dr. Jones was a longtime member of the PennFuture Board of Directors, and he and Sandy currently also serve on our President's Leadership Council. Over the years, Dr. Jones's leadership activities in PennFuture have been many. What stands out most to me is the work that he did while on our board of directors to help revise our investment policies to divest of fossil fuel holdings and eliminate as much as possible those investments from our portfolio. The Joneses have also created connectivity between PennFuture and other like-minded organizations that they're involved with. So just as one example, here in central Pennsylvania, they've been able to bridge a relationship and create just a terrific and mutually supportive relationship with Physicians for Social Responsibility, which they're also involved in. So as I move toward my retirement in July, I don't only want to acknowledge their leadership around the society, but I also want to acknowledge their friendship and the fact that they have always welcomed me into their home and have always had time for conversations along the way when I needed to tap Dr. Jones's intellect and passion for our mission, for advice, and also to say thanks to them for being a constant and steadfast presence on all of our advocacy efforts and outreach efforts. And we have so much gratitude for all of those involvements that really have culminated in their helping to establish this Dr. Jim and Sandy Jones Legacy Giving Society, and for encouraging and helping to educate others like all of you that are joining us today to learn a little bit more about plan giving and possibly to consider a legacy gift at PennFuture yourself. So Jim and Sandy, it's just fantastic to see you, and thank you for being here. And again, this leadership on the society, we couldn't be more appreciative. So back to you all.
Thank
We
you.
give to PennFuture. My background in pediatrics was always connected to the welfare of children. By adding partners I was able to pursue additional interests, such as running the Cystic Fibrosis Center. I also realized that the health of the earth was an important part of overall health. To pursue this, we resurrected the Harrisburg Hershey chapter of Physicians for Social Responsibility. It was through these interests in the environment that Joy Kaufman invited me to become a member of the PennFuture, which later led to being a member of the board of directors and an activist. It is important to have purpose in life that is over and above personal health, family, and friends. For Sandy and I, global warming and its impact on people and wildlife around the globe led us to become involved in an organization like PennFuture. PennFuture fulfills these goals. Therefore, by sharing financially, we are able to be a part of the ongoing struggle for the preservation of the planet and aid them in doing their work and educating lobbying for the issues and needed to improve life, such as having clean water and clean air. In addition to giving money, giving time and service is important. We have been able to keep up to date on important bills that are being discussed by our legislature. We have had many friends who use PennFuture as a resource for the knowledge they need to go into the community and advocate for environmental concerns. We have been a part of training sessions, which help to prepare for doing this work.
PennFuture has been blessed with outstanding leadership since its inception, and Jim and I are grateful for whatever contribution we are able to make to continue the work of this much needed organization. Thank you.
Thank you, Jim and Sandy. Really appreciate your support and thank you for sharing why it matters to you to support us. All right, back to our regular program.
Sorry, I was muted. Thank you so much. That was very inspirational. A couple things I took away from that, Jim and Sandy, is your love for the health of the earth. I too am a steward of the environment. I think that's really great. You have the passion. You're creating a purpose in life, right? We're all here for a reason, and you're certainly a great example as to the impact you're making today, but the impact that you want to make into the future as well. So just know that what you're doing is contagious, and I would say is very inspirational. It's very passionate. So thank you so much for what you do. So let's get back to the program here around demystifying planned giving. And I'm trying to get control again, Travis, to advance my screen.
So we have them live, we have them recorded, and we have a picture of them. I think we've
Yep. I thought this was a great photo as well.
an awesome picture.
Thank you for submitting this. This is great. Before we dive into the program today, I just wanted to give a brief disclaimer here. Obviously, we are here to try to educate. We are not attorneys. We are not tax professionals, although we have all those services at Fulton Financial Advisors and within the bank. But we are here really just to present and give you some ideas on how you can make an impact to PennFuture. So take what you will from this presentation. We will certainly answer any questions, but if they are tax or legal related, we would ask that you please seek advice through your professionals. Okay, so what is planned giving? I have to tell you, planned giving I've only been involved with for the last several years, and planned giving can be very complex, or planned giving can be as simplistic as you want to make it. And we're going to try to keep it simplistic. It's not that we don't think that you can handle complexities of it, but we want to keep it, given the time that we have today, we want to cover really what is the general reason for planned giving. It's typically a gift that you can make today or in the future. It's a way that you can work with your financial advisor typically, or your tax professional in a way to plan to make a gift. And that's all it is. It's not more complex than that. So we're going to go through a number of different planned gifts and ways that you can make an impact on PennFuture. Here's a whole list of different plan gifts and different vehicles. There's probably even other ones, but what we're going to focus on today are just the ones that we have highlighted: bequest, retirement plan and life insurance designations, beneficiary designations, appreciated securities, charitable IRA rollovers, and donor advised funds. I'm sure the majority of you probably are familiar with a bequest. Bequest is a gift that typically is going to happen at the time of death. So this is a gift through a will or a living trust. Typically, not always, but most individuals will work with an attorney to help draft language in your will or trust. And essentially, you're basically saying, at the time of my death, I instruct my folks that are handling my estate to take care of my assets as I have indicated in such in these documents. And the benefit of that, while it's not a current benefit, you do get an estate tax charitable deduction when making a gift through a bequest. It does reduce the burden then of taxes on your family at time of death. And ultimately, why we're talking today is because it leaves a legacy for PennFuture. So a quick example there, let's say a scenario where husband and wife have amassed a sizable estate. They have 3 independent and successful children, and they also have some grandchildren, and they are comfortable knowing that their children have provided for their kids and that they have provided for their kids in their lifetime, that they would like to leave the remainderment of their estate to PennFuture. It's simple as drafting that through a bequest or through your legal document and working with your attorney.
Peter, I guess I would just add too, you had in there that it can be a percentage of your, your whole estate. Sometimes it's a set dollar amount. And interestingly, we have some where it's set dollar amounts to various organizations. And then at the end, like Peter said, sometimes they set up a trust that continues and continues even in the will. So that bequest, it doesn't necessarily go out right to the organization. Sometimes it sets it in trust and it continues to pay that nonprofit year after year after year. So the bequest can really, like when we say get to legal advice, it isn't always as simple as I give 10,000 to this organization. It can be more complicated than that. So it's always good to explore what the intentions are and based on your dollar amount of investments that you have. So.
Yeah, that's a really great clarification, Sherry, is that perpetual nature of some of these bequests, to your point, can continue serving and benefiting some of these nonprofits for many, many years into the future. The next one is very easy as well. I'm sure the majority of you have some type of qualified plan today. It could be an IRA, 401k, 403b, and or a life insurance policy. So this is something that you do again during your time of life where you would go in and you would work with your plan administrator or your life insurance provider. You ask them for an updated beneficiary designation form. And to Sherry's point before, you can designate all or a portion of the value of the plan. This will pass on to charity at time of death, and it's revocable. It can be changed during lifetime. The one thing I think that's really, really important to know, while it's very easy to do this will override, the beneficiary designation will override anything that you have, even in your will. So whoever you name as an account's beneficiary designation will receive those assets after you die. So the only point I want to make there is just to make sure if you do have a qualified plan, if you don't have any other beneficiaries that you want to designate, it's very easy to do so, but just know that that will override anything that is found within your will. So you want to make sure it's current. Great example there, let's say husband and wife, retirees, they don't have any children, they currently don't have anyone designated to be a beneficiary, and they have a love for the outdoors and for the environment, and they want to make an impact on PennFuture. They would simply work with their plan and make sure that their designation is indicated as what their will is at the time of death. So those are two what I would call very easy, simplistic ways to leave a lasting and meaningful impact on PennFuture. Next, I'm going to turn it over to Sherry, and she is going to speak about the next three different types of plan gifts, including appreciated securities.
Okay, thank you, Peter. And I'll just follow up. We covered the beneficiary of a life insurance plan. There is a plan gift on that introductory slide that talks about actually, having a life insurance policy that is owned by the nonprofit. That's a whole other type of gift and really involves a lot more analysis. So as Peter said, this is a simple way, since these assets aren't covered in your will, it's a simple way to take some of your assets and basically do a bequest, but you're doing it through that beneficiary form. But yeah, the life insurance being owned by the nonprofit is a whole other mechanism for funding a planned gift as well. And maybe we can cover something like that in the future. So the next one is appreciated securities. In my 30 years of being in this business and doing what I do, I realize now more and more people are invested in stocks and mutual funds that in the last 30 years than they ever were. So when I started this business, I can remember that you would meet with somebody and their main investment was a CD at a bank, because they could get, remember this, 7% on like a 1-year CD or a 5-year CD. Well, I guess that was back in 1993 that they could do that. So more and more people, as interest rates became very, very low, I think people had more access to information and investment advisors. I do believe a lot more donors and folks are invested in stocks or in mutual funds that invest in stocks, maybe sometimes bonds. But, usually what we see is that, somebody wants to make a gift to a nonprofit, and whether they figure it out on their own or through their investment advisor, tax advisor, or the nonprofit, the suggestion of, gee, rather than writing us a check that takes it out of your current checking account, did you know that you could take your, for example, right now, Tesla stocks, since it's one that has appreciated so much since people first invested in it, you could take some shares of your Tesla stock and basically gift them right to the nonprofit. So you take your ownership of a piece of it and you transfer it directly to the nonprofit organization. And what that does for the donor is it gets the capital gain away from them. They don't have to sell it and then give it to the nonprofit. If they did that, the donor would have to claim the capital gain and pay tax on it. But if they take that piece of that stock or that mutual fund, transfer it right to the nonprofit doesn't pay tax and doesn't have to claim a gain. So the nice thing is you're taking some appreciation there and doing good with it by supporting PennFuture or another nonprofit, and then also, kind of avoiding that capital gain in the meantime. So I've seen it on both sides. My business, when I first started, I dealt with a lot of private clients. So I've sat down with the clients like, wow, which stock should I give? So we look for the one with the biggest appreciation or the biggest holding. We look at it for different reasons to say this is the one that makes the most sense. You don't want to do something that's at a loss. Obviously, what you're trying to do is avoid the capital gain. So we figure out what that security is and we transfer it right over to the nonprofit. So we have to get some information and do that. Now, luckily, I'm on the other side of it where we deal with the nonprofit organizations, and many of our clients, Fulton is in a position where we can bring that security in. So, at the end of the year, people, even though they may not be taking a tax deduction for it under the new tax law, we still see a flurry of stock gifts and mutual fund gifts come in at probably from October through December. But we almost every day get some sort of an appreciated securities gift in the form of a stock or a mutual fund for our clients. And then what most nonprofits do is sell it right away. As soon as it comes into the account, let's liquidate, because we don't know what the markets are going to do. Are they going to go up? Or are they going to go down? And that donor, let's say they're trying to do $25,000 of a gift, they're going to pick a number of shares that on the day they say to their broker, their investment advisor, send it, that's the number they're going to send. So you want to get that to cash usually as quick as you can, so that, again, it can be used for operating, it can be put into endowment. So most nonprofits will have their investment manager, and such as Fulton is what we do. We sell them right away, get them converted to cash. And then what we do at Fulton, I don't know that all money managers do this, but we will value it for the nonprofit. So we'll follow the IRS rules, which basically say take the high and the low on the day it came into the account, figure out what that average or that mean is, and then take that times the number of shares, and that gives your donor their gift value. So we actually provide that to our clients like PennFuture so that they don't have to figure that out. And then if they want to be giving that to the donor, they can do that. So there's a little example of the appreciated securities. And then the next one, I remember being at Lafayette College when the charitable IRA rollover came into existence. But I also remember the years where we went to the end of the year not knowing if the law was going to be passed to keep it, to have it again that year. Luckily, 5 years ago, maybe, finally it was made permanent. So it's a permanent part of the tax law, and people can do this every year until it changes, but hopefully it won't. But now it's a more permanent thing. So some people call it the charitable IRA rollover. I think because that's really defines for a donor what this is. It's taking money from my IRA and doing something charitable with it. But the technical term is really a qualified charitable distribution. So if you go to look up IRS rules, or you hear somebody talk about a QCD or a qualified charitable distribution, they're basically the same thing. So I purposely titled this slide this way so that we could use both terms and again, provide some information, help educate a little bit. It is for somebody who's 70 and a half or older. So you can take from your IRA at 59 and a half, but it really is only for those who have hit that 70 and a half, which is the required minimum distribution age. It's the age at which you must start to take out, whether you want to or not. The IRS says at 70 and a half, there's a required minimum. That's the age it must come out. So that's the age that this kicks in, and you can do this. And it is limited to 100,000. So if you're lucky enough to have a very large IRA and you have to take out more than 100, only 100 of your distribution can go to a nonprofit. Can you do less than that? Absolutely. So let's say you want to do, 10,000, it does not have to be 100, but the limit, the maximum you can do is 100. It is only applicable to IRAs. So if you still have your money in 401k, like Peter showed earlier with the beneficiary form, if you have it in a 401(b), some other type of retirement plan, it has to be an individual retirement account. So that's the other caveat that most donors have to follow. And it does have to be a direct transfer from the charity. So what you don't want to do is take your distribution and have it paid to you as the IRA owner, and then turn around and write that check or try and send that money to the nonprofit, because the IRS won't see it that way. They're going to see it, and your current holder of the IRA is going to see it that you took the distribution. So basically you contact your provider of the IRA and you let them know, I want to do a QCD. I want to do a charitable IRA rollover. Usually they'll have forms and instructions on how to go about doing that, so that what they'll do is your keeper of the IRA is take that money and make it payable right to the nonprofit, and it'll come in right to the nonprofit. So you'll have never touched it and never have seen it. So we have a lot of other information there for you. It can't be used to like open up a CGA, so there's different things in there just to kind of give you some idea. I'll let you read them. I don't necessarily have to go through them all, but if you have questions, we can come back to them. And then the next page, this came up when I attended a few sessions on this and heard some accountants talking about it who prepare tax returns. So I pulled the current tax return for 2021 to see, has it changed in the last 2 years. So I just share that with all of you, because the CPAs and the accountants did a really good job of explaining to donors that were in the audience, well, what do you do once you've done this? The one thing that I would say the IRS did is they kind of broke out, like where I have the highlight there on the 1040, they did break out and separate your pensions and annuities from your IRA. Before, they were all lumped together. And I have a feeling this is a step toward being able to better track this and see this. So you will put your IRA distribution on line 4A and show the amount that is the full amount that you took. And then the taxable amount is what you'll put in 4B. So there you would write a 0. So you took 25,000 out and put that in 4A, because the IRS is going to see that coming out. What you'll do in 4B is show a 0. Because none of it's taxable. You sent that right to the charity. You have documentation from your IRA administrator, from your charity, your nonprofit telling you that you did that. So you'll have proof. You put a 0 there. And then the CPAs are recommending that what you do is you put a little asterisk, or you put a little note and put QCD next to that line. So it's very clear and there aren't any questions. So that's how the accountants and CPAs were doing it. So if you do your own taxes like me, just a little extra kind of help on how to do the IRA and the QCD. From the donor standpoint, there are, luckily enough people that say, I'd rather not take it from my other funds that are coming in, my Social Security. I don't want to take it from my rental income that's coming in. I may have other things, and I can actually take my gift and get a benefit. I don't have to pay tax on that, so I can take it from my IRA. So we do see a lot of that happens. And then Peter, if you want to go to the next one, we'll do donor advised funds. And then we'll love to hear some questions or some other things after we finish up with the last one I wanted to cover. So donor advised funds, this has really been an area that has exploded. We probably should have put some numbers in here, but I think our links at the bottom would give you a chance to look at some of those. But basically, what people are doing is putting money into a charity, but it's not the one that they ultimately want to benefit. So they're going to Vanguard, Schwab, Fidelity. Those are probably the three largest, or the local community foundation. They're a 501c3, and they're saying, here's some money. I want this to be put into my fund. It's my donor advised fund. And right away, you get a charitable deduction for it. So you might put in, several years worth of donations. Or let's say you sold a business and you're trying to offset a gain. You might put enough money into there to get a deduction to offset some of that gain. You work with your financial advisors, you put that money in this donor advised fund and you get a charitable deduction right away because you've given it to a 501c3. But then your ultimate goal from there and your ability after that is to give out grants. So you go to that 501c3, Fidelity, Vanguard, Schwab, maybe in the future, Fulton. We're actually looking at possibly in the next year or two, having our own that donors can use. The community foundation, you go to them and you say, look, this year, I'd like to take a portion and suggest a $5,000 grant go to PennFuture. So it goes through their process. And ultimately, they're making the gift after that because you've already gotten your deduction, you've done your major gift, but they usually take the donor's grant suggestion and they do a grant to that 501c3. It can't go to another private foundation, so it has to go to a 501c3. But it's a really neat way for donors to do bunching. So when the tax law changed, the only way you can itemize is if you go above the standard deduction. So a lot of people, stopped itemizing. Well, that was where they got to put their charitable contributions and use that deduction. So some people will take several years worth and every 2 or 3 years say, I'm going to put a bunch of contributions together, put it in my donor advised fund. So I get this big deduction and can take more than the standard deduction. And then the next 2 or 3 years, I'll go ahead and do my annual gifting for my donor advised fund. So there's a whole article there on, some high net worth people and some people that wanted to be able to take more than a standard deduction every so many years as basically bunching it together and every so many years being able to do the donor advised fund. So it's an interesting vehicle. Love to answer more questions about it. Peter, I think you had a story about somebody that did a donor advised fund and why they did it. So love for you to share that if you could.
Yeah, thanks, Sherry. I think it is a great vehicle, the donor advised fund. It's the popularity, like you had mentioned, it's in the billions of dollars that are set into these charitable giving organizations. And I think of donor advised funds as just a tremendous opportunity to introduce multi-generational philanthropy. So a simple example would be, let's say some grandparents, they want to make a gift to a number of different charities. They identify, say, a donor advised fund through Schwab or Fidelity, Vanguard, like Sherry had mentioned. They make their gift to the 501c3, and then they get their grandchildren involved. And you think, well, how can they possibly get involved? I think the beauty of the donor advised fund is there are some families, not even just family foundations and private foundations, but there are some families on a smaller scale that will meet, say, annually around the holidays. And they'll explain to their grandchildren how a donor advised fund works. And they'll actually ask their grandchildren to come prepared and do some research on potentially, in addition to, say, PennFuture, some other types of nonprofits that the grandchildren feel passionate about and that they want to leave their mark. And while the grandchildren aren't old enough to contribute to this donor advised fund, they can still be part of the solution and moving philanthropy in the right direction and making impact, whether that be locally or globally. So I think it's just a great way to not only get the benefit knowing that you're doing well, but you're also bringing potentially other family members or partners into the mix so they can learn about philanthropy as well. These are I would say, very simple examples that we gave you today on planned giving. As you recall in some of the other slides, there are a lot of other vehicles that are out there, but we wanted to make this simplistic, potentially actionable. We wanted to serve as a resource for you. we certainly also wanted to answer any questions that you have. So we're hoping that this was a good use of your time, and we certainly would love to open it up to any questions that the group has, whether it be specifically plan giving or other ways to make an impact on PennFuture today or in the future.
So Peter, before we do that, we'll give people a chance to think about their questions and let them know we're kind of wrap it up. Back to the donor advice funds. I wish I would have said my kind of not drawbacks, but maybe some other considerations before Peter did his great benefits, because he did great benefits. I think one of the things for nonprofits with the donor advice funds is I think so many people are giving to them, maybe because their financial advisor recommended it, their CPA recommended it. But then if there's no follow-up, I think one of the biggest detractors is the fact that they don't have to take the money out in any period of time. And I think eventually the IRS, and I think Congress is already talking about it, I think government's starting to realize, wow, that money's just sitting there, not getting into the hands of the nonprofits it's ultimately going to go to. So I think at some point we're going to see a requirement that the donor is going to have to, make grant requests on a fairly regular basis or do a certain amount every year. But, of those trillions of dollars that have ended up in donor advice funds, unfortunately, some of it's just kind of sitting there waiting to be dispersed. So it is something I think that, like Suzanne, Travis, Jackie, you guys should be having conversations with donors about, because I think some of them have it in there and they don't know what they need to do next steps. I think that's one of the drawbacks, is just the fact that there's no requirement for the donor to then make the grant request out. So there's a lot of money just sitting there right now that needs to eventually get in the hands of the nonprofit. So I thought I'd just share that because I think it does end up there and not go any further. So yeah, we'd love to open it up for questions or delve into some of these topics a little bit further.
Well, I want to thank you guys for these comments. They've been great. But I also, Sherry, I read that in 2020 there was $18 billion sitting in donor advised funds that had not been distributed for years. So I agree with you. That is a big problem, and they need to change that legislatively, because everything else about a donor advised fund is fantastic.
Exactly. Yeah. And I've been saying that for a couple of years now. And then I finally started hearing some folks on TV saying it, that, passing some legislation that it changes. So I think we'll see that happen. I think that would be really great. Like you say, they're great vehicles. Now we just need to get the money in the hands of those who really it's meant for.
Thank you, Sherry and Peter. So let's have those good questions.
So
This is Rusty. I have it. Go ahead. Go ahead, Jack.
the Foundation for Enhancing Communities, that would be a donor advised fund?
They have it. Yes, they do. The Foundation for Enhancing Communities. We have received grants, recommended grants from them at PennFuture. People have utilized them. Yes, Jack.
Because you can give them a block of money and then you tell them where you want the money distributed. We also, and this was set up by Jim Jones, have, for example, $100,000 there for the Harrisburg Peace Garden that Jim was instrumental in forming. And then all the income, that money can't be touched, but the income from that then is used in perpetuity to maintain the Peace Garden.
Yeah, so Jack, that sounds like an endowment. That sounds like that was set up as a permanent endowment with some guidelines around it. And that first one you mentioned, I'm not familiar with the foundations for communities, but the way you described it sounds exactly like it must be structured like a community foundation, and they're doing donor advice funds.
Yeah, for those of you not in the Harrisburg area, the Foundation for Enhancing Communities should really just be called the Harrisburg Community Foundation, because that's how they operate, both in giving out grants and also being a conduit for people to set up donor advised funds.
And Rusty, did you have a question?
You mentioned at the onset perpetual bequests. I was wondering if there's a minimum dollar amount that makes that worthwhile, and is there any advantage to the recipient rather than just getting a chunk of change to do it as they wish?
That is a great question. So at a place like Fulton Financial Advisors, we do have some minimum requirements for accounts. So if you were to name a bank or a financial institution as trustee of that perpetual trust, you're going to want to know what their minimums are. So in our case, it's $1 million. But what I would say is then it's worth talking to a community foundation. So something like the Foundation for the Enhancement of Communities, which is really the Harrisburg, a lot of times they will set up perpetual trusts, and they'll serve as the trustee. So I would look to foundations if you're under some of the minimums of the financial institutions. So that was the first part of your question as far as minimum. So yeah, I don't know that there's any minimum. I mean, you can pretty much figure out, in our case, most of ours have been converted to private foundations, our charitable trusts. So we're pretty much required to give out 5% every year. That's another IRS law that I think we'll see changed. You've heard it here first. I think at some point we're going to see, given market returns and where they are, where they've been, it's getting harder and harder to pay out 5%, keep up with inflation, and have that perpetual account stay the same or grow. So I think at some point we may see the IRS give trustees and private foundations a chance to go to maybe like 4.5%, but that's besides the point. What's the benefit to the beneficiary? I think the biggest benefits are kind of twofold. One, with an outright bequest, the nonprofit would take that in and have to take control over it, have control. That can be a benefit. But I've seen some circumstances, and I'll kind of say it's probably been mostly in some religious organizations where it's all volunteer, where it's people that change regularly. There's a lot of turnover. And sometimes that outright request, people look back and say, oh, gee, we should have, turned that into an endowment. We should have saved it. We should have invested it and had something available to us every year. So I think the biggest advantage is when you do it that way, you kind of help the nonprofit by ensuring that every single year, some of your gift will be available for them to use. Peter, anything to add as far as the benefits of doing the perpetual charitable trust?
No, I think you hit them all, Sherry. I think, again, the idea too is to outsource that to a trustee organization that has the ability to handle all the administrative details. They are pretty complex, some of them, at least as far as the filings and the tax status. Again, we would suggest please check with your advisors, but certainly a way to leave a lasting impact, and certainly another option doing so.
Sherry and Peter, what would you recommend? We have some younger folks who occasionally will ask questions. They're maybe in their early 40s, and they're like, well, I'm not so sure this is for us now. Why should we be considering anything for the future? Any thoughts?
Sherry, I don't know if you wanted to go first. I'd be happy to jump in. I would say, from a philanthropic standpoint, it's never, too early to start, if you will. People's priorities change, throughout their life. If you were to ask me, 20 years ago, Peter, if you were looking to leave a legacy, if you will, with what little you've amassed, if you've amassed anything, where's your interest? And then as I had a family and a child and became a cancer survivor and some other things have happened, now all of a sudden those, priorities have changed and areas that I would love to leave an impact on. I think at times I often think, well, any amount is meaningful to an organization. A planned gift doesn't necessarily always have to be in the millions. And at the same time, planning, philanthropically is also planning financially. So I think if you have a healthy financial plan in your 40s, it should incorporate some aspect of philanthropy and or giving, whether that's for your own personal interest or whether you're looking to get a tax benefit that you can benefit today by giving today and also by planning for the future. I just think it's a discussion that we read over and over where individuals are desperate to seek information from their advisors on how they can make an impact, and their advisors aren't having the discussion with them. So the idea is to educate the advisor community on these powerful vehicles and then start talking with the 40-somethings. Don't wait until someone is retired or maybe they've already given and they already have their plan set. Start planting those seeds now, and that will pay dividends in the future. Those are my general thoughts off.
Yep, Travis, go ahead, because I had a few things too, but go ahead, Travis.
Yeah, no, I just wanted to make sure that we got one other point in here at some point, and that's, whether you are making plans for PennFuture or any other organization that you support, it's really important to find out what their legal name is and their EIN number. And this comes up certainly with PennFuture, as our legal name is, Citizens for Pennsylvania's Future, but most people think of us as PennFuture. That's a little bit less confusing, but I've had friends with United Way agencies where someone's left a gift to the United Way, and then it becomes disputed whether it's the local United Way or the national chapter, same thing with like YMCA's, other things. And that can really tie up a legacy gift in litigation for years. And that's certainly not what you want. So just whatever you're doing with any of this, always be sure to make sure it's very clear in your directions, the legal name of the organization, and if you've got it, which we always provide on our information, the tax ID, EIN number, just so it's all really clear for whoever's executing your estate.
That's a really important part, Travis. And I think mine ties in slightly, as I was listening to Peter talk and Suzanne, looking at the group of people here, everybody here, I think, has a really big interest in PennFuture. So I think if you're talking to potential donors, and you want to get them on board, myself personally, the biggest impact has been seeing what the organization has been able to do, so I think anything you can share with them that just shows, the good that you're doing, the changes that are happening. And then I think about being a plan giving officer at Lafayette College, what did the donors want to know? What have we done? What new buildings, what new programs, depending on their interest, show them what Lafayette College has been doing to support that program, that student, and just kind of grow and change. So, I think, again, that's how you get people to give. And then I think along what Peter was saying about like not waiting until too long, think about the generations we're looking at now, more and more people in stocks earlier. So start plan giving with an appreciated stock or mutual fund, get that conversation started, then you can lead to some of the other ones.
Yeah, great point, Sherry. Thank you.
Other
Happy
questions?
to answer any questions or any comments or ideas.
I'll just share. I'll share a fun idea that we're working on. So I run a wealth management practice, and Peter, I also have my CAP designation, which is great designation. Something we're building right now here, which might be of interest to you guys, is we're building like a slingshot fund at Signature. We're going to do a couple of them, but we're going to use donor advised fund as the vehicle, and we're going to bring together people with like social missions, and we have a philanthropic advisor here who will be working with the group to basically find out what the interests are, and we'll have quarterly meetings where she's going to bring back a list of like 4 or 5. It will work like Shark Tank, where these nonprofits will basically pitch as to why they should receive some of these dollars, and then the group who has contributed the money to the pot will make determinations about where to donate the money. And then as a step further, because Sherry, you were talking about incorporating donor advised funds and to bring families together, we think that's a great idea as well. And so we're going to create a slingshot fund for kids who are 15 to like 29 to be able to start instilling these philanthropic values and learning how to give away money and be critical about the organizations they give to. So just something we're working on here.
That sounds awesome. Yeah. Reminds me of like the old investment clubs with the Beardstown lady, except now you're doing more toward the philanthropic part of it, getting together and collectively making some decisions, not about investments now, about who to give the money to. So that's what that reminds me of. That's great.
Yeah, outstanding. Always happy to connect with a fellow CAP as well. So great stuff, Scott. Thanks for making a local impact. That's outstanding.
Absolutely. Thank you guys for what you're doing.
Sure.
So Peter, I'm going to suggest that we'll see if there's any more questions. Could we possibly go back to the presentation and pull up that slide with all the topics, that one that gave all the different types of plan gifts? I'd love to hear from the group. Are there any there that they would love to hear about in the future, whether it's you and I that do it, or Suzanne and Travis find some other folks? I'm just wondering if there's any other ones. And again, we'll take more questions. It's like we tee that up just as a kind of a finish up. Any other questions? Or stories, like hearing stories too. All right, so we pulled up that list of the plan gifts. As Peter said earlier, we covered bequests, the retirement plans, life insurance, again, as beneficiary, the securities, the IRA rollover, and the donor advised funds. There's some other ones there. I don't think I'd be great to talk about like real estate or personal property. We don't do a lot of that within our group. But things like the first three, the charitable remainder trusts and the charitable lead trust, as well as even charitable gift annuities, pooled income funds aren't used as much, but, we'd be happy to talk about those if anybody, or if there's something here that you see, we'd love to hear if there's any interest in delving into those deeper, or any of the topics today. Could we bring in other experts, maybe bring in an accountant or a lawyer to join us? If there's any there that you have an interest in delving into further, just love to hear from you today about that.
Well, Sherry and Peter, maybe that is something that we take a
Follow up.
little further down. We take this and we do a little questionnaire. What would people like to hear? Do a little poll. But I think this has been very informative for folks and very appreciative for everyone who showed up today. And I did put in the chat our new planned giving page, maybe updated with just one or two additional things in the near future. But for right now, we've got that. Travis and I have that set up, and we basically have it leading out with our legacy. And want to also end with saying how grateful we are that Jim and Sandy Jones took that interest in our organization and decided to support us all these years the way they have. And they've been an inspiration to many of our supporters as well. So unless anyone has any more questions, I'm going to say thank you, Sherry. Thank you, Peter. Thank you to everyone for showing up. Thank you, Jackie, for your wonderful introduction. Thanks, Travis.
Thanks, everyone.
You're all very welcome, and thank you all for being here today.
Take care.
Thank you all.
Good
Thanks, Suzanne.
presentation.
Thanks, everybody.
Appreciate the
Great to see you
opportunity.
all.
Thank you very much, everyone. Take care.
Right.